In the middle of 2014, the price of oil was well over $100 a barrel. As the year now draws to a close, it's hovering around $60. The consequences of this dramatic decline are still being felt, whether among oil producers grappling with a severe drop in revenue or businesses and consumers enjoying the benefits of cheaper fuel. Just what is driving the fall in oil, and how low can it go? With me here to discuss the state of oil are Amrita Sen of Energy Aspects and Neil Hume, the FT's commodities editor. Welcome to you both. Amrita, what do you see as the reason for this marked decline in oil?
I think there's been a combination of factors. The first was definitely a slowdown in demand growth, and Libyan production, which has been offline for over a year, that started to come back. Of course, you've had US production growth just continue at a phenomenal pace.
This is shale.
US shale growth, yes. So when you put all of that together, you basically had inventories that continued to rise for a good 8 months in a row. And then the expectations was for OPEC to cut production on November 27th when they met. When they didn't cut production, that's really when the downfall became a lot more severe in oil prices, because it was very much about a new paradigm for the oil market, about expectations, about the fact that now there is no so-called put option in the market, that there is nobody to stabilize these prices. So now prices have gone down to levels where producers and consumers will react. Right.
Neil, you've been following this very closely. Fingers being pointed at speculators. This comes most recently from one of the most powerful people in the oil market, the Saudi oil minister, Ali al-Naim.
Things he was saying were very much, I think, aimed for a domestic audience. In Saudi Arabia, the stock market's had a very heavy fall. That's obviously related to the oil price. It's quite a retail sort of focused index there. The government had a lot of distribution of wealth through the stock market. So I think he's reaching out to the domestic population and saying, look, this was our decision. This is why we took it, trying to explain what was behind it. And then obviously speculators can be blamed for pushing the price down to whatever level it is. But I don't think until now we've really heard an explanation from the Saudis exactly what's behind this. And as Amrita will tell you, there's countless conspiracy theories and explanations as to try and figure out why it is they've done why it is they didn't cut at the November meeting.
Why do you think they didn't cut?
Amrita, do you?
I can hazard a guess, just
Go
like
on.
most other people. I think the first thing was that, unlike in 2008, 2009, when we had the financial crisis, there was an external shock that affected oil markets because there was a banking crisis and an economic crisis that took demand down. So then OPEC had to cut production to balance the market. I think a fundamental difference this time around is the weakness in the oil market came from the oil market itself. It came from rising US shale production. It came also, particularly for Saudi Arabia, Iraqi production has been growing, and they were focused on market share in Asia. So from Saudi Arabia's point of view, they don't want to cut production unilaterally. They want everybody to join in.
Neil, do you see this as something temporary, or are we going to have to get used to this as a more permanent feature of the market?
If the Saudis are going to let the market decide what happens with oil prices, this could be a prolonged period of sub-$100 oil. It's going to test the viability of shale producers. Can these producers, get their costs down even further, improve productivity, efficiency, and that might push the oil price even lower. We just don't know. So it could be a prolonged period. But I mean, going back to your earlier question about, what it isn't, I don't think the Saudis have done this to punish Russia, as we've heard, or to punish the Iranians or anything like that, or there's some grand alliance with the Americans.
Conspiracy theories you both
Yeah. So I don't think it's that, but I do think, as Amrita said, that they are concerned about market share in sort of what has been an oversupplied market.
Others who've suffered are renewables. The renewables sector, they've been hit quite heavily by this. Shares in companies involved in that area have been falling. Do you think for them this is going to be quite a watershed moment?
I think, again, like Neil was saying, it's too soon to say, even particularly from oil producers' point of view, just because we've had the drop now. It needs to be sustained for at least 6 months before we see any reaction. I think the same is true for renewables and other alternative energy, because if you get a prolonged period of, say, $60, $70 oil, yes, suddenly the alternatives are no longer as attractive because they still are very costly. And then, you will still use oil in most, whether it be for driving, whether it be even for trucks. And therefore, renewables do take somewhat of a backseat.
Forecasting is always a bit of a dangerous game, Amrita, but if we were to meet here again this time next year, where do you think the oil price would be?
Compared to today's prices, I would say we'd be higher by the end of next year than lower. First half will be weak. 60s, 70s, potentially even sometime in the 50s, as we are seeing now. But ultimately, this is an industry with very high costs, very long lead times. Costs are not going to come down as much as prices have come down. So we will get back up. The question is whether it's late 2015, early 2016, and whether we go back up to $100, but we will be higher than lower.
Neil?
I think towards the back end of next year, we will start to see some slowdown in US shale production growth. It will still be growing, but not at the same pace as it has. And perhaps, I don't know, with the lower oil price, that will stimulate some demand. So we might get a pickup there on that side of things. So yeah, I broadly agree. I think it will be higher. I'm not sure it's going to be massively higher.
Neil Hume, thank you very much. Thank you, Amrita Sen. For more on this and other topics covered by our analysis team, please go to ft.com/analysis. We'll be back in 2015. So until then, goodbye.